Good morning. Thanks so much for tuning into the trade setup. I'm Neeraj Shah. And well, much to my surprise, yesterday there was a bit of strength that was exhibited by the markets. And today the world markets are not in a tizzy, which is actually a good sign. So let's take stock of all that's happened. The Qs aren't the most positive, though. So the 2-year yield has hit the highest level since 2007, 10-year at 3.09. So the US 10-year yield and the 2-year yields have certainly gone up. Oil has ended up more than 4% on prospects of an OPEC plus supply cut. Usually, this is bad news for India, oil being high. The dollar index at 109.03, a 20-year high. But in light of all of this, still, the Asian markets have largely risen after sharp falls on Monday. So the US markets too, by the way, yesterday had a corrective move. Nothing, not a deep gash. Maybe the deep gash happened on Friday, but there was a bit of a corrective move that happened yesterday as well, about 1% lower. But the futures are trading mildly in the green. The other cues, like we said, I mean, you look at the dollar index, look at the yield, look at anything else, it's all high. But the point being, Asia is trading in the green. Maybe an exception here or there, but in the green. And the SGX Nifty should be indicating a start, which is mildly positive, about 40 odd points. The other thing, and I was reading this on the Bloomberg, on Bloomberg, this is the trading pattern that happened on Friday's fall in the US, by the way, viewers. The VIX was stuck near 25, and the total quantum of outflows or withdrawals was about $1.2 billion, which was roughly half the daily outflow experienced around the market's June low. So clearly, the volumes on the downside, or the volumes getting withdrawn from the US markets as well, has come off. I'm still a bit suspect, but that doesn't matter. The market is saying that it is digesting this Jackson Hole commentary pretty well. Yesterday's Spaces session had divergent commentary too. I mean, the Spaces what with Mr. Ajay Bagga, who's a global markets veteran, but other smart investors like Safid, for example, who tune in, seem to believe that all was well. Who knows? Time will tell, really. Flows. So what's the trade setup? I think there was a show of resilience by Indian markets, likely green day today. The mid-cap 100 index is still above the support zone of 3100, and technical experts believe that that's actually something which could give a bit of a support to the broader end of the spectrum in the market breadth, which would matter to most retail investors per se. And amongst spaces which did well, while the markets was doing what it did, and a bunch of indices corrected, which I'll talk about a bit, but FMCG had a show of strength, defensive nature did really well, and pharma actually showed some tremendous intraday strength. It recovered very well from the lows of the day. We'll talk about that index well a bit yesterday, in a bit on the show today, on the segment today. But clearly, by virtue of the strength that they exhibited yesterday, pharma and FMCG become the sectors to watch on a possible positive day today. Excuse me for the tongue twister. Foreign investors sold off a little bit, 561 crores, nothing too dramatic. The belief is that if indeed the dollar index is doing what it is doing, quantitative tightening hitting this week, interest rates set to rise, you'll probably see outflows from the Indian markets. We haven't seen a dramatic pullback, at least on Friday or today. Let's wait and watch if these numbers worsen. And therefore, the stocks to focus on, the sectors to focus on become really, really important, especially when the news flow isn't the heaviest. So first, the sector in focus to my mind is IT. It declined the most amongst all sectoral indices on Monday, down 3.53%. The Monday fall was the worst fall since the 13th June fall, wherein the index had corrected about 4.12%. So in nearly 2.5 months, it was the worst day for Nifty IT yesterday. The traded volumes were twice as compared to the 5-day average for most stocks. It was led by Naukri. The decline in the space was down about 7.4%, and the delivery volumes for Naukri were up about 106%. Emphasis was down, which is down 13% month to date, or since 18th August actually, cracked under 4.1% in trade yesterday. And a bunch of mid-cap IT names have had a corrective move the whole of this month. The last 1 month, if you look at it, Emphasis down 9.5% in total. Since 18th August, it's down 14%, but for 1 month perspective, down about 9.5%. Birlasoft 8.41%, despite the open offer being out there alive and kicking. Zensar Tech 7.8%, LTI 6.25%, Persistent down 5%. So, most of these stocks have seen chips being taken off the table after a pullback that we've already seen in the last 3 or 4 odd months, right? So it's not that the IT stocks have been the toast of town in the last quarter or thereabouts, and still the 1 month returns have been so negative. I mean, Emphasis, which used to trade at 3,200, 3,200, is now at circa 2,000. That's nearly a 33% or over 33% shave off from the highs. So it tells you that some of the pain is in the price, but certainly a sector to watch out for. On the contrary, Nifty Pharma did really well. As an index, it recovered nearly 1.5% from intraday lows yesterday. Apollo Hospitals was up about 0.6%, up about 4% from the lows, by the way. Lupin was up 1.2%. Lotus Labs was up about 1.2%. Clearly showed that some of these stocks had some traction going into them yesterday. What might not have some traction is Piramal Enterprises today. The record date for the demerger is 1st September, but the MSCI exclusion is effective today. And MK suggests that there could be potential outflows of about $100 million from Piramal Enterprises. Some of it usually, I mean, market preempts these things, and typically it is buy the rumor, sell the news, or sell the rumor, buy the news. But in this case, let's wait and watch if it's different. Do watch out for Piramal Enterprises today. Some other stocks to focus on include HFCL. It's going to consider a fundraising via equity or debt on September 2. Remember, 2 days ago, the news flow around the kind of expansion plans that they see was very large, and therefore watch out for HFCL. Sun Pharma, they see high single to low double-digit top-line growth, and I think the Macquarie note yesterday seemed to suggest that Sun Pharma and Cipla were the top favorites from the pharma pack. Not that therefore that will happen, but I'm just bringing you what brokerages are saying. Zomato, there's a talk of could there be a rebranding? Company says no plan to rebrand Zomato app to Eternal, and no change in anybody's roles and responsibilities. Cholamandalam is being rated a new underweight at JP Morgan. The target price is about 600. Speaking of brokerages, brokerages come out with a view on Reliance Industries post the AGM, and most have maintained a buy. JP Morgan, so this is let's say view. The JP Morgan view actually says that the focus will now shift back to earnings with the AGM behind us. So watch out for Reliance. Could there be some positives out there? The other thing to notice is Patanjali. It had a very it had a analyst meet yesterday. Apparently, they have given some fairly positive commentary. A 5-year vision being given, a bunch of other pointers, including what they are doing on the royalty front, how edible oil will give 2-3% EBITDA margins, etc. Now let's move on from Reliance. So Patanjali is the stock that I'm talking about, and do watch out. Maybe there's a bit of a traction today simply because the analyst meet, apparently the takers were very, very positive. So do watch out for that one as well. Side of that, yeah, Morgan Stanley has a note on Maruti overweight, target price of 9839. Yeah, this should be the long and short of it today. Just give me a minute, viewers. Let me just try and see if there are any other stocks worth talking about which I may have missed. So no, not really. This seems to be pretty much about it. Watch out for IT, watch out for pharma, and oh yeah, there's just one last update. Escorts was up 6.5% yesterday on some rumors that maybe there could be a delisting. The last corporate activity that happened in Escorts was probably a buyback in March 2022. I reckon from that period until a year, there cannot be any kind of delisting activity. So even if it happens, it happens post March 2023. So if you're trading Escorts on that rumor, maybe you might want to think otherwise. Thanks so much for tuning in. Have a safe day ahead, everybody.